Good morning. It's November the 4th, 2023. It's the Wall Street Weekly Wrap Up with your host, John Newquist. Big earnings week. Several of our portfolio companies reported earnings. The number one market cap, Apple, reported earnings, and we'll get into it. Let's take a look at McDonald's, number one retailer. I thought they did pretty good. Beat by 17 cents. The revenue rose 14%. Again, 8% growth. If you can beat that, you're doing better than the average on any sector. So that's what we always look for. We're always looking for some growth. Because if you don't have growth, then you're really just paying for a dividend. Again, good earnings. You can see on the chart it came down quite a bit from the highs of earlier this year, and it's been bouncing back. We're almost at 50%. Again, we don't own it. We watch it. But it is a good stock. It's a good sign that the consumer is still strong. SOFI is in our portfolio. Negative earnings, which we don't like. But the revenues are good. They beat expectations. Everybody's excited. Student loans are going to have to be repaid in October. And we're in November, so they should see a pretty good quarter next quarter. If they're not positive earnings next quarter, then we're probably not going to keep it. Because everything else, you can look on the chart. It beat that purple line downtrend. It's got a break. It's in the, I always look at these wedges. It's a positive break. So how high could it go? It could go back up to, 14 maybe. We'll see. We take a look at the indicators. We were at 5% on the 2-year note and 30-year note, and it dropped a lot. Crude oil, $80 a barrel. Wasn't but a month ago we were up at the 90s. A month ago, a 90s. So people are defying. Saudi Arabia is cut, Russia is cut, and India is switching away from the Russian to the Saudi Arabian. So, you got buyers. It's just that the economy is slow a lot across the world. Natural gas, I still think it's going to be below $3. It's at $3.79. Just in time for the wintertime, just so we can spend more money on natural gas. Gold, oh my God, almost at 2,000. We're looking at it. And silver, kind of not as good. But copper, it's at $4 is the magic number. When the economy's going, copper will be at 4. So that's the number we always watch for the economy. I call it a leading indicator. Soybeans and all the grain commodities starting to come back. Remember, high in the last year, big drop. Now we're getting a bounce back. So what we mean for food, going to be a little bit more expensive. And the indexes all came back this week. The Russell up 8%. Look at this drop. This is a big drop for all 2,000 stocks. And everybody talks about the Magnificent Seven, the top tech market cap up for 90% of this, and the rest of the index is flat. But everybody was ugly last week. Everybody. But all the indexes gained this week. Higher for longer, yes. Interest rate hikes, maybe not. That's what everybody's hoping for, maybe not. Tesla, we bought at 195. We've been watching Tesla every single week. And, we bought it at 100 and sold it at 200. And then, of course, it went up to almost 300 here. And now it's dropped down. You got to look at it. This is August 2023 prices. This is before Tesla announced the deals with all the charging stations, before they put out the truck for display. Now, the truck's going to be rolled out slow, but Tesla's got a lot of cash. The UAW pay an average $65 an hour. Tesla's at $45 an hour. EV subsidies are still there. So I think Tesla's going to do all right. I would not be surprised to see it. Now, remember, we bought at 195. It's at 219. 219. That's a big drop. You make this drop from 300 to 195, and then you bounce up 10% or more. That's a big gain. Most people would be happy for 10% in a year. Got that in a week. But we're going to hold on Tesla. A lot of news is positive. A lot of news that people want. They missed the orders. But, I've learned to deal with Tesla that he promises as much. He doesn't make it. No big deal. You got to look at the total numbers. It's going up. It's slowly eating away, and they're going to kick the heck out of all the other car makers on EVs, maybe except for Ferrari, which had good EV numbers. Budweiser, we watch it since you can't take the number one beer and tank it and throw it out the window, and now it's what, number 13 or something? Alexa, stop.
This is a reminder.
Alexa, stop. I don't know why I get these reminders during the show. But, you got to look at this. This company made a lot of money. Revenue's $15 billion. They're making, you know, earnings per share. They're doing all right. Revenues did rise. Everything else besides the beer is pretty good. So, what you're seeing here is that there's a lot of people looking at this bottom over here, and they think it's going to go up much better. So that's something to think about. Modelo having a great year. Constellation Brands. Modelo's our #1 beer now in the country here. So we'll see. Like I said, they went up partnership with the UFC, which is pretty good because UFC is getting popular. I think it's franchise. That's why we own TKO. Caterpillar, #1 manufacturer in the country, does well. Dropped quite a bit. Slow sales, slow weakening demand overseas, and that's what nobody wants to hear. They want to hear about high demand, high things. Again, they make money. Don't get me wrong. Look at this, $5.52 a share. Revenues jumped 12%. They're doing well, but like I said, it's a lot of weakness in China, and that's what everybody's worried about. And of course, Novo Nordisk, I forgot to put the chart in, so we're going to pause. Snap our fingers, and the note chart is there. Novo Nordisk, Ozempic. That's all you have to remember. Novo Nordisk makes Ozempic. 3-week wait for it. It is the #1 obesity drug made for type 2 diabetics, but everybody's using it. Should have bought it in May. It went up 53%. It has a chance to double even from here. Quadruple even from here. You got to remember, when you have such a heavy demand, you can't make it fast enough. That's a stock you want. Is it going to level off eventually? Yes. But what's this market? I mean, Walmart's telling us that people who buy these drugs buy less food, lose weight. Boy, is there anything negative to this? Well, maybe there's some kidney issues. That's what everybody's looking at. But right now, we're going to be in it. We want to be in a stock that you have such a demand, just like COVID and the vaccination and the flus in 2020. Those are the stocks. Moderna went up 800%. 8 times your earnings if you would have bought Moderna in March. Apple, #1 stock market cap wise. 4th quarter in a row, revenues fell. They stick with this stock. They're not going to do it. Why? Because look at this profit. Holy smokies. $21 billion. They are just generating cash. But if you think of it as a bond, that's what you're getting. You're paying, such and such 19 times earnings or 30 times earnings, whatever it is, price to earnings. I don't know. I don't want to buy a company that's flat. I want to buy a company that's innovating and growing. This means it could drop. It's been dropping on here. But, the revenues, 8 cents, 7 cents, okay. The earnings were $1.46 a share, but the revenues, that's the issue. I mean, you think about, look at this. You got $20 billion of revenue on $90 million, or $20 million of profit against 89 revenue. That's some serious money. Loyal customers. But we want to buy companies that are making money and growing. That's the key to success. That's why we can beat the S&P. We go with this. Yes, Apple's still up for the year. WPC, Carry, our REITs, one of our 2 REITs. We got just a sector. When you look at sectors, real estate, utilities, consumer staples, pharmaceuticals, and healthcare. Holy smokes, it's just been beat up. But you got to be in it. The idea is we're trying to beat the average, so pick the best of the REITs. And, Carrie's having problems. You can see this has been one long, painful downcline. Well, revenues rose 16%. That's good. They're going to give you upside guidance. That's even better. So if the interest rates go down, then we're going to start making more money. But otherwise, we just have to kind of bite our tongue, be a little light in it, but that's it. ExxonMobil, our big energy company, I think one of the best run companies, buying Pioneer, missed by 10 cents on the earnings, missed on the revenues. Well, oil went down. Oil's down at $80 a share. It's going to be down. But what people don't realize, $2.27 per share earnings, billions of dollars, billions with a B. Yes, the revenues fell, but they're going to make money. I mean, think about it. There's a lot of money they make. And yes, it's been in a long channel, and everybody wants $100 oil. I heard one of you could get 150. Yeah, everything could get up that high if there's a shortage, if people cut back, and the economy tears. But you know, when you get up to 110, they're going to open up those shale mountains in North Dakota, Pennsylvania, and they're going to flood the market again, just like they did before. So, yes, we have a plenty of area. You know, Exxon's pumping out record capacity of oil. So we're going to stay with it. We like it. Good dividend, solid grower. The sector's been tough this year, you know, but we have faith it'll do well. And, you know, like I said, the only stock we bought this week was Tesla. What a surprise, 10% upside. You know, I always tell people sometimes you have to look at other stats, and let's look at the cash that some of these companies are sitting on. Apple, $162 billion of cash. That's a lot of cash. Microsoft, right behind Google, right behind. So these companies, when they have money like this, it gives them a lot of cushion against any kind of currency fluctuations. You want to buy something, you can go do it. And even Netflix, holy smokes, got $8 billion in cash. So these are things in here. You start thinking, well, who do we own? Microsoft, Alphabet, Amazon, Meta, Tesla. You know, not bad companies to own. If we had some growth in Apple, we'd probably own Apple. But these are things that we want to take a look at. I hope everybody has a good week, warm week, and stay safe. Thank you very much.